All right, here I am. I'm with Josh Goldberg. Guys, this could be a familiar face for you. Josh is the owner of the Goldberg Group at Barrett Financial. And we get a lot of questions from buyers right now in this market. And so today's video is going to be answering the top 5 questions that the both of us get in today's market.
Love it.
So let's stay tuned. And in the meantime, if you wouldn't mind, click that bell. You'll be notified when I put up new videos. And if you like the content today, please subscribe to the channel and don't be afraid to comment. It really helps the video and it helps me understand what I can do better to help you as the viewer. So make comments, ask questions, and let me know a couple other topics that you might want Josh and I to shoot in the future. Stay tuned. We will be right back. Hi, I'm Kelley Norton, your AZ Realty lady at EXP Realty. Count on me for all things Arizona real estate. All right, welcome back, guys. If you are new to my channel, I'm Kelley Norton. I'm known as the AZ Realty lady. I'm a Valley native and a real estate agent of over 22 years right here in the Valley of the Sun, Phoenix, Arizona. And I help people that look to relocate to or within Phoenix and the surrounding areas. So if you are thinking of moving to the area or just relocating within the area, please call me or text me. It is the best way to reach me. And this guy here, this is Josh. Do you want to introduce yourself, Josh?
Hey, I'm Josh Goldberg at the Goldberg Group with Barrett Financial.
All right. So let's dive into these top 5 questions that we are getting from buyers in today's market. All right. So we're trying to keep our videos a little fun. We both are, we kind of think we're cool. We're fun
I would like to think so.
Yeah.
Yep.
Yeah, that's right. So we'll just call this like our little questionnaire happy hour here today.
Let's go.
All right. So what do you feel is the number one question? And in no particular order, but we'll start with the number one question that you're getting in today's market or about today's market.
So with almost every client, one of the first questions, if not the first question, is what is the rate? What's the rate that I'm getting? And my response to that is always, well, there's 10-ish different factors that go along with the rate. Credit score, debt ratio, assets, down payment. It's kind of like asking how much does a car cost? Well, what's the make? What's the model? So instead of being specific about this rate, it's, hey, here's a rough idea of the rate ranges for different programs, conventional, VA, FHA. Let's figure out what program you're going to go with first, and then we can dive into, hey, here's an idea of a rate range based on your specific scenario. Let's not talk in generalities. Let's be more specific to you.
Starts with the conversation.
Yeah, like I want to be a resource, so let's talk about you, not your neighbor, not what your dad told you.
Right.
So that would be, my response is, hey, it depends. Mm-hmm. So let's talk about you specifically and what you're trying to do. What are your goals? What are your timelines? Then we can get that question answered a little better.
Right. Exactly. So if somebody wanted to get their rate down, this is my question. So we'll talk about it number 2.
Okay.
Because it kind of ties into that rate question.
For sure.
And
yeah.
People want to know, what is the rate? And obviously people know that the rates have gone up, over the past couple years. And, this is nothing new, guys. Rates go up, rates go down, and it's a cycle and it happens. So if somebody is trying to buy, which by the way, we have a lot of buyers. So if you're watching the news and they're saying no one's buying, everyone's scared. No, people are still buying. Yeah. It's just that sometimes you have to get a little creative. Yeah. So the number 2 question I get from people is, what can I do to lower that rate so that my payment is a little bit more comfortable?
Yeah. So there are absolutely strategies that we can put in place to have like a temporary buy down where you can have a lower start rate. So I get this question a lot too. So I'm glad that we're talking about this. I think most people don't realize you can actually have a start rate that is 2 or 3% lower than what your base rate would be. So let's take an example that somebody's rate is 7.5%.
Yes.
We could do a 2-1 buy down, meaning the first year, the rate is 2% lower. So it starts at 5.5%. That is their payment for a year. Then it goes to 6.5%. Then it goes to 7.5. There's a 3-2-1 where it starts 3% lower. It starts at 4.5. That is great for people that are looking for things that are slightly more affordable right now. Know that they're getting promotions at their job. Know that bonuses are coming. Know that the family dynamic's going to change and maybe somebody else is going back to work. So yeah, I think the idea, it goes back to you and I are trying to be a resource to figure out what is best for them, what makes sense for them today.
Yes. And that's why that conversation that you have with your real estate agent and your trusted lender is so important. Because if you just have someone that says, hey, this is what's best for you, they're not going to know what's best for you. They need to have a conversation with you, get all the information of what your goals are, what kind of changes you may have coming up, how long you're going to be in your home.
Great point.
Yeah, all of these different variables to be able to give you the option. And we both really believe that we give you the information based on what information you're providing with us so that you can make the best decision for your family and for yourself.
I love that. I want to piggyback on it for a second. Confidence, clarity, peace of mind. I am always going after that. I know you're going after that. We want to be resources for our clients so that they feel comfortable in whatever decisions they're making. And that's why it's, hey, we need more information. Let's talk about you. What are you trying to do versus here's the rate. This is what's best for you. We don't even know yet.
Yeah. And that's what drives me nuts about online, I'm not going to mention, but all the online kind of stuff or the commercials that you see, where just go on, get your loan. Yeah. You don't actually have a full conversation, or you're having a conversation with someone that's an hourly paid person rather than somebody that this is their livelihood and their business. And us being in the business and our longevity in the business depends on us taking excellent care of you, the borrower and the buyer. Yeah. And that hourly person, they don't care once that phone is hung up. And by the way, you're probably not going to talk to that same person again. Yep. So these are things that are very, very important. And sometimes I go down little rabbit holes when I'm talking, but it's because I want to share, what I see, the experiences that we have. And I think that it's all really good information. And
you're passionate about it. You care. Like, this is something that is important to you. It's important to our clients.
Yeah.
And
it's heartbreaking when they're burned by someone else.
We've both been in this long enough to know and to see when that happens and how frustrating it is, because you know how you could have helped them if they would have talked to you. So yes. I feel you.
Exactly.
Yeah.
All right. So that was number 2, is how to get that rate down. Now, I'd like to answer that from a real estate standpoint. Right. So another way to get that rate down is that a lot of buyers will actually ask the seller for some assistance at closing. So if you are a seller and you're getting ready to sell your home, that's something to kind of expect in today's market, that a lot of the loans are at, or I wouldn't say necessarily loans, the offers coming over for you as a seller that you review is going to have something in there that's probably going to ask for some closing cost assistance. Yeah. And a lot of the buyers, they want that to help with their payment. So something to be expected as a seller in today's market. And if you are buying a home or planning to buy a home, it is an option for us to ask the seller to pay for some of your closing costs that you can put towards buying down that interest rate or getting a type of loan that will help you with your rate. Let's dive into number 3.
All right.
What you got for us?
All right. This one's for me?
This one's for you.
Okay. So I'm going to ask you. I'm going to ask you a question.
Oh, gosh.
Let's talk about something I bet you're hearing that I'm hearing. Yeah. Is it a good time to buy right now?
Yeah. So this is a great question. I get this from a lot of people. So there are variables, pros, cons in any given market. Whether we have interest rates down really low, you're going to have pros and cons to buying in that market.
A lot of competition.
Yep. You have interest rates that are higher, you're going to have pros and cons in that market. So in today's market right now, where interest rates are a little bit higher, buyers, some of them are like, okay, well, should I buy? Is this a good time to buy? If you were to have been trying to buy a home 2 years ago, this is what it looked like. Waiving your inspections, having appraisals that would not come in to where your purchase price was. So you're coming in with, I've had some people come in with like over $100,000 cash to bridge that appraisal and purchase price. And also, you have so much competition that your average buyer that didn't have $300,000 sitting around to throw towards the house, that, by the way, did not go towards their financing.
Yeah.
It just went out there. It's not like it was buying down equity or buying any, it wasn't that way. It was just being thrown out there, waiving inspections. So much competition gave the buyer absolutely no control in the purchase. And a lot of people, if they look at buying a home back 2 years ago versus buying a home right now, it's not worth right now. It's better for some people because they didn't have to go and throw $200,000 out there just to have whatever interest rate that it was.
Or make 10 to 15 different offers because you couldn't actually get one accepted.
And you couldn't get the home you actually want.
Right.
Yeah. So in this market, what's great is that buyers have choices. So you don't have to settle on the house. There's so many buyers that were like, I don't care if it backs to a street. I just want it. If in today's market, you have to look at what do you really, really want, and you have those options. So I think that any market is a good time to buy if you're educated and you understand the pros and cons in that market, and understand that it's all a cycle and eventually things change. So if you are okay with purchasing now and you can afford your payment, we always want you to be able to afford your
Affordability
payment.
is key. Absolutely.
Yeah. So as long as you can afford the payment, you will have the ability to buy the house that you actually like and that you actually want. And you have the inspections, you can get sellers to do repairs. So you do have a lot more control over your purchase in today's market.
Get seller concessions like you had mentioned earlier. Have close of escrow dates that fit your timeline. To piggyback on what you're saying, I think there is a definite competitive advantage for a buyer today because of all the things that you were just talking about, the less competition, the ability to ask for concessions. Completely agree with what you were saying. And full circle to go back to it, if it makes sense for you, if you understand the market and it's affordable, because all of that changes and we care about what is best for you and what makes sense today, you got to live somewhere. So what are the options? Right. Let's see if buying a house makes sense and is a good one for you.
Exactly. And a lot of people are renting. So what they'll do is, we want you to compare paying your rent, which, by the way, you're paying someone else's mortgage. So you're not building equity for yourself. You don't have any write-offs with it. So you're throwing that over here into just, I kind of call it the garbage disposal. So it's going away. Yeah. It's gone.
Yeah.
Where even if over here, your payment, and in many cases, it's pretty similar, if not saving money on the mortgage, even with the rates. It just depends. So again, conversation, right? I have to have the conversation with you, weighs out pros and cons. But most of the time, purchasing, even in today's market, is better than staying with the rental. And, people refinance. I bought my first home and then the rates had changed within a year and a half. So I refinanced and went down like 1%. But if I hadn't have gotten into the market when I did get into the market, then I would not have had the little bit of equity that I had to do my move up purchase. So it's also important to know sometimes you just have to get into the market. And in the cycle of real estate, if you look at real estate and its longevity, values trend upwards. Yeah. So you may have a little bit of this that happens, but it does this typically in an upward trend.
Agreed.
So you get into the market, you start earning your equity, and then when you're ready, you'll be able to have equity to purchase the next property. And if the rates go down, then purchase at that point once you have already built some equity here, or refinance and stay in the same house.
Yeah. And goes back to the structure and the strategy of when you get in. How long are you planning on being in the house? Is it going to be a primary forever? Are you turning it into a rental? So those are the conversations that we're having with clients so that we get them in the right place and so that they know all their options.
Right. And that's important. I love that because we always want to talk to people about what your future plans are with the house. And I think it's important to talk about that timing. And we always do that with our customers to really figure out, okay, well, if we know kind of what the 3-5 year plan is, and then maybe look at 10 years. Most people don't know how long they're going to be in their house. Most of them, they're selling, 5 to 7 years. But it's all about a conversation. Starts with that.
Yep.
Yeah.
I love it.
Anything else you want to add on that number 3?
No, I think that was good.
All right. Hope I didn't go into too many rabbit holes. All right. So let's talk about number 4. So what is the number 4 question that you get in today's market?
The down payment question. How much down payment do I need? I heard it's 20%. My dad told me it's 10%. My neighbor said it has to be this. So let's answer that pretty quickly. If you have a VA loan, you could do as little as 0% down. FHA as little as 3.5% down. Conventional as little as 3% down. There are down payment assistance options as well. So again, there are variables, and it goes back to what makes sense for you, what makes sense for the client. But the barrier to entry and the barrier to getting a house is often much less than what people think. And I get the question a lot, oh my God, how much do I have to save? Well, we just talked about down payment. A little earlier, you were talking about that there's a very good opportunity to get seller concessions. Yeah. So when we pencil out those numbers, very often it is a lot less out of pocket than what people think.
Yeah, so. Very, very true. And I always like to tell people that the conversation that you have with the lender, you really need to have that earlier than you think. And it's for a few different reasons. So number one, because of that question of how much money do I need? How much is my down payment? You can start saving this well in advance. Yeah. And a lot of times I'll have people and they'll reach out and say, hey, I'm ready to buy my first home, or hey, we're ready to move, we're ready to go. And I want them to talk to the lender, but sometimes they've waited so long to actually have the conversation, and they do need a little bit more money that now we're sort of, kind of they want to go, but they don't quite have everything that they need yet. So, yeah. So I always recommend that if you're thinking about it in the next year or the next 6 months, that's when you reach out to us. So you reach out to me, I'm going to put you in contact with Josh. Or you can reach out to, Josh directly. But that 6 months to a year, don't think that that's too far in advance. It really helps us start that conversation with you, know what your plans are, know what your goals are. And by the way, I've had clients that when we did start the process and their credit was checked, they had fraudulent things on their credit. Yep. And it takes a little bit of time to submit and have all that removed. So it's great that, we did check ahead of time because we were able to help those people and be able to challenge those fraudulent, what do you call that?
Oh, derogatory credit, right? So what is important timing wise is for us to have the ability to put the plan in place for whatever makes sense for the individual person. And the more time we have to do that, the better. So that we can have 6 months, a year. When's the best time? It's now. Let us have a conversation. Let's look at your credit. Let's look at your income. Let's look at your assets. And if there's something we need to fix, we have time to fix it. I'll say it's easier to be ready than to get ready. Let's get ready. And then if the house comes up that you want to jump on, great, you're good to go.
You're ready. Yeah.
I'm sure you've run into it. We've had clients that have said, like, oh, I'm not looking to purchase for 6 months or a year. And then you get a call on a Saturday like, oh my gosh, my home's ready to go. I want to make an offer. And we haven't done the legwork up front.
Yep.
So.
Exactly. All right. So we're on number 5 now.
Okay. So number five question. What happens if rates go down? What would you say to people? What happens in the market?
Yeah. So, you're right. A lot of people do ask that. So what do I do if the rates go down? So instead of, say, waiting for rates go down, wasting all your money on rent, and then, of course, by the time rates do go down, typically the prices are going to do this again.
Prices go up, more competition if rates
houses,
go down.
Yes. So what can you do if you've already bought, so you've locked into your price, you've got the house that you want, and now the rates go down? So refinancing is an option for people to do that. So can you explain for people like how does that work if the rates do go down and they want to refinance? What does that process look like for them?
So I got to start with, we are doing a program right now because of the rate environment that we're in. We're trying to remove friction points for people to get into a house. So we have a buy-fi program. This is the Goldberg Group specifically, where if you refinance with us in the first 2 years after a purchase and after doing a loan, we're going to do that for free. We're going to pay for all of your fees, appraisal, title, you'll get a credit for everything. And it also allows people to potentially refinance when rates just go down a little bit because they're doing it for free. And if rates go down again, we can do it again for them. And what that process looks like, it's as easy, it's usually a 3 to 4 week process. It's similar documentation when you bought the house. And all you're looking at is getting a lower payment, lower rate, lower payment, better situation. Get to keep the house at the purchase price that you got it at.
Yes.
So some definite benefits with that possibility.
Perfect. So refinancing is definitely an option. Well, guys, I hope that you enjoyed the video today with Josh and I here going over the top 5 questions that we hear in today's market. And we kind of touched and dabbed on a couple other things, which is in true Kelley fashion, because, I go on little squirrel tangents now and again, but my viewers understand that about me. If I feel passionate about something or I feel like it's important for you to know, I always share that with you. So if you want to ask any questions of Josh, feel free to put it in the comments here, or you can also reach out to him directly. So what is your number, Josh? How can he reach you?
480-510-6350. Text, call, whatever works.
Perfect. Yeah. And texting and calling me is the best way to reach me as well. Information is on the screen and also in the description and on my channel here. So again, I'm Kelley Norton. I'm your AZ Realty lady. This is Josh Goldberg of the Goldberg Group at Barrett Financial. Thank you so much for watching and have an awesome day.